And it's already looking like November, which is traditionally an absolute non-delivery month. We may have 20, 30, 40 million ounces of silver standing for delivery. And then, of course, you've got December, which is a big delivery month. And then again, I believe February. So they're running a gauntlet right now trying to source metal to deliver to the contracts that are standing for delivery.
The president then can monetize gold, revalue it at whatever he wants, and we get a gold-backed system. But what he's done, what did he just do in July? Stablecoin, token, genius, act. We're being pushed further and further away from this, further empowering the Federal Reserve. Now, the interesting thing, I want to answer that question, but about this privatized system that was just signed into law, the Genius Act here, it's still overseen by the Fed, despite the fact that the Fed can't do anything.
Physical silver is rapidly exposing the cracks in a paper-driven financial system that has been leveraged far beyond its reality. The current COMEX situation, where paper contracts trade multiple times the world's annual silver supply, isn't just an anomaly, it's a warning signal. Deliveries that were once easily settled in fiat are now being met with difficulty, as buyers increasingly demand physical metal. This squeeze is happening in what's traditionally a quiet delivery month, suggesting deep stress beneath the surface. As demand grows and available supply tightens, the illusion of infinite paper silver begins to collapse. Billholter, a respected analyst known for his focus on systemic fragility, and Gregory Mannarino, an outspoken market strategist, both emphasize the same point. Confidence is the final pillar holding up the current system. When that pillar breaks, everything tied to debt and derivatives will reprice violently. Central banks are already signaling their awareness, stockpiling gold while quietly accumulating silver off the record books. This is no coincidence, it's a matter of preparation. In the end, physical ownership will matter far more than digital promises or tokenized representations of wealth. Proper security lies in holding what cannot default. As the debt pyramid begins to crumble, tangible assets will be the lifeboat that survives the storm. Now, we present the clips from their interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates. Thank you, and enjoy the video.
The BRICS may just stand up and say, that's it, we're done. We're not using SWIFT anymore. We're not using the dollar anymore. We're going live with our payment, trade, settlement system, etc. I think it depends largely on the decisions made out of the BRICS. The silver over gold, that's easy because silver is such a small market compared to gold. I mean, the same dollar has at least 10 times more power in the silver market than the gold market because gold is so much bigger. As far as a failure to deliver goes, we're already seeing here in November, the amount standing for delivery has already increased from first notice day. In past years, if you go back 3, 4, 5 years and earlier, the first notice day would have X amount of contracts. And by the time delivery was made, there might only be 10 or 20% of those contracts still standing that didn't walk away and take a fiat settlement. Over the last couple years, maybe a little more than 2 years now, what's happened is you have X amount of contracts standing for delivery, and by the time the delivery cycle is done and deliveries are being made, that number might be 1.5x or 2x. And it's already looking like November, which is traditionally an absolute non-delivery month. We may have 20, 30, 40 million ounces of silver standing for delivery. And then, of course, you've got December, which is a big delivery month. And then again, I believe February. So they're running a gauntlet right now trying to source metal to deliver to the contracts that are standing for delivery. I'm on the record saying that I think the derivatives complex is going to be taken down by silver. I think silver goes and gold will go immediately, and that's going to put a very bleak picture on the other contracts that COMEX has, whether it be, oil or pork bellies or interest rates or whatever. The value of a contract that cannot perform is zero. And if you've zeroed out, and I'm using silver because that is the market that I believe is going to detonate the entire system. The big drop on Monday that we saw in both gold and silver, that was done with paper. I think the number that I heard was 1.2 billion ounces of silver traded on Monday. The world only produces 850 million ounces collectively in a full year. That's global annual production. So you had almost 1.5 times the amount of silver that's produced in a year traded in one day. I mean, I don't have, I can't show you proof that no gold or silver, physical gold or silver were sold. But I can tell you from the standpoint of the mentality of the buyers, buyers have had a hard time picking up big pieces. When I say big pieces, 25, 50, 100 million plus. They've had a hard time procuring gold and silver in those numbers. Any buyer, any physical buyer that got nervous, they would have sold, they would have hedged with paper is what they would have done. On Monday, you did not see, in my opinion, you did not see any real physical gold or silver hitting the market. What you had it was a paper slaughter. And you can go back to Robert Rubin's strong dollar policy in 1996. And that's been the case on COMEX and LBMA ever since, is that every time we see a waterfall on a gold or silver chart, it was caused and done by paper sales, not physical sales. Central banks have their purchases have been continually expanding. They know, I mean, if you and I understand this, and a lot of people understand that the dollar's a problem, you better believe that central banks all over the world know that the dollar is a problem, and they better hedge that position or put something in there or on their balance sheet that's going to expand when the dollar collapses. They understand that gold is the answer to a collapsing dollar. So that's why these central banks are unloading gold. And I believe, the official statistics show that, yes, they're buying hand over fist. But I think there's a lot of unofficial buying by central banks that's not being reported. When people ask me how much gold or how much silver should I own, my simple answer for the last probably 4 or 5 years now is you put into gold or you put into silver whatever amount you don't want to lose. Because gold and silver cannot bankrupt in a world that is going to be, everything is going to bankrupt. The whole debt facade is going to come down. Yes, it will be much bigger. And I would just say that if you're involved in a tokenized gold deal, you have to have trust. You have to trust that gold actually does exist and it actually is in the vault. Having gold in your hand or silver in your hand, you have it. Having gold in a private non-bank vault is, as long as you've bought it from one company, moved it to the private non-bank vault, then you've got 2 separate entities. You don't really ever want to buy from a dealer that stores the gold themselves, because who's there to watch them? There's no way to know whether the gold actually got there. But if you've got 2 separate entities, or in a retirement account you get 3 separate entities, then you've got each one watching the other to make sure that they're honest. So my comment on that basically is, with tokenized gold, there's still trust involved. There has to be trust involved, otherwise you won't.
The financial and political framework of the United States is rapidly evolving toward complete centralization and digital control. The blending of government and corporate power through tokenized currencies is not innovation, it's consolidation. Recent legislation has quietly enabled private systems to operate under the Federal Reserve's oversight, allowing a new monetary layer that mimics decentralization while keeping absolute control in institutional hands. This shift ensures dependency, not freedom, as Americans are steered toward a digital company store model where value, privacy, and autonomy are dictated by those who issue the tokens. The illusion of stability is being maintained through inflation manipulation and political theater, but the fundamental structure beneath is cracking. Manufacturing is dissolving, the currency is eroding, and public dependence is growing by design. When the reset comes, it won't return power to the people. It will repackage control under new technology and familiar authority. Let's get back to the interview.
President Trump can end the Fed in 7 seconds. It's already there. The Gold Reserve Act of 1934.
Right.
It just needs a signature. If he signs it, the Fed ends, dies, over. The president then can monetize gold, revalue it at whatever he wants, and we get a gold-backed system. But what he's done, what did he just do in July? Stablecoin Token Genius Act. We're being pushed further and further away from it. It's further empowering the Federal Reserve. Now, the interesting thing, I want to answer that question, but about this privatized system that was just signed into law, the Genius Act here, it's still overseen by the Fed, despite the fact that the Fed can't do anything. In other words, we can't take action because it's a private system being overseen by the Fed. It's diabolic. It really is diabolic. But the chances of us having a system, a gold-backed, commodity-backed system, is 0. We go back to a gold-backed system, which would return power to the people. It would take it away from central banks. Will central banks allow that to happen?
No.
There's no way on this earth that central banks, in fact, the Federal Reserve right now, this is why I am so concerned about what is happening right now. It's happened already between the Fed and the Treasury. They've literally put themselves in a place of checkmate. We, the American people, have been checkmated here. The Fed has their guy right now calling for low rates, a weaker dollar here, vastly inflating the debt, helps the 1%ers. That's it, destroys us all. And that's the mechanism. The Fed has wanted the spot they're in right now for over 100 years. They will, you name it, they'll do whatever they got to do to keep that power. And we've surrendered to it. People like you and me, the people that follow our work, they haven't surrendered to nothing. They won't. But the fact of the matter is, it's way too late to legislate our way out. We're already seeing the system come apart, the economy, what's happening with inflation. And they're telling us it's cooling. It's not cooling by their own numbers. It's getting worse here. Core inflation continues to rise. And they're telling us the dollar it's stronger. It's rebounding. Has your cost of living changed? Has it gotten better? No. Has the cost of anything changed? No. So it's the propaganda. And we are right in the middle of the early stages, very early stages of a new propaganda deception campaign people aren't going to believe. Right now, we can't get any data. The government shut down here. What's that? It's a crisis. What's that crisis going to do? It's going to require more funding. This crisis is deliberate. They can blame whoever they want. Trump can blame the Democrats, and the Democrats will go back and blame him or everybody else. The fact of the matter is, they all know what's going on. They realize that without this mechanism, we go back to a Mad Max situation, but they're not done. Why are they not done? In my opinion, and I think this is a fact, not an opinion, is they're not done creating slaves to the system with dependency on it. Once they got most of the public literally on their knees, losing their jobs, their businesses closures, look what's happening to our manufacturing base. It's evaporating. You can't even have a nation if you don't have an industrial engine. But that's exactly what's going on by design. Well, we were supposed to change all that. Remember that? What Trump said? We were going to bring it back. It's dissolving. Do you realize that all these so-called deals that President Trump has made, which he hasn't made one deal yet that doesn't involve an import tax on the American people, not one. How is that a deal? It's not a deal to me. It doesn't make any sense to me, but that's the way it's working. And is no one standing up to the guy, at least yet. I'm hoping that at one point, people that supported this thing, it's not human either, are going to finally say they've had enough. Bottom line is, look, it would take a revolution in this nation to bring us back to a commodity-backed system. It will require commitment. It will require, more than likely, a war to occur on American soil to make this happen. We'd have to change anything. People would die. People are not willing to do that. They were a long time ago. They were willing to die for what they believed in. But now people have been divided and therefore conquered. They're done. This is why current administration or any administration can do whatever they want. The people are done. They're finished. And they're becoming more dependent on the system just so when it all ends, they can say we have a solution for it. It's where we're being set up. It's too easy to see. There's been a drop from the recent high, but we're going much, much higher here with price action of gold, silver, real things, as the dollar continues to be literally sucked dry of purchasing power. So you could say it's so many things. It's an inflation gauge. It's an economic gauge. It's a meltdown gauge. It's a hedge against the system. Period. The end. So man, people should embrace this. And I know. Especially the mainstream media, they're like, well, should we buy? Should we buy? Yeah, you got people on some of the mainstream media outlets saying, well, you should be buying gold here. It's too high. Too high based against what? This is what drives me nuts about the mainstream media. They get a guest out there, they're questioning back and forth. It's all scripted, quite obviously.
Right.
But, the question is, is this the right time for people to buy gold? And then the person will come back and say, well, based on whatever metrics they come up with, which are all nonsensical, people should be careful and cautious. And I get that. But looking at the bigger picture here, if you look at what's happening to not just debt here in the United States, but global debt, what do you want to do? What do you want to do? It's insanity when people try to say things like, well, it's overvalued. Based on what? Again, show me or tell me something that makes sense to me, and then maybe I'll change my mind. Until that time, I see gold, and especially silver, as potentially, in fact, I would say the most undervalued assets on the planet at the current time. The new system, it's how it's going to work is this. It has to start out this transition into the stablecoin token. I call it the company store. I want people who are listening to this, to just look up the company store model, how the company store model worked. The company store model was basically this. You worked at a company, and they paid you in their own currency, and you got to spend it at their store. Basically, that's what they're going to do here. You're going to have companies like Amazon, like Walmart, all these major corporations start to issue their own tokens. This is a completely unconstitutional system here. Nowhere is it written that we should have a system like this. They're going to tell you that this is currency. People are going to believe it, especially the young people, because they're not going to be used to it. This is absolutely unconstitutional, yet Trump signed it into law. Okay, what else do you expect from a guy who I believe is completely corrupted and only out for himself? And of course, people just like him, the 1% and 2%ers. But that's just my opinion. People are entitled to their own. I just look at what's happening here. It's pretty easy to see. So what we're doing here by these corporations being allowed to issue these their own tokens is returning to that company store model. They're going to how to sell it, what they're going to do. And, I see it this way. They're going to make it very, very simple to use. They're going to make it very lucrative for people to start to use, let's say Amazon, for example, who could possibly want to be one of the first to issue their token to come out. You use these tokens and we're going to give you XYZ. So people are going to go, heck yeah, man, I can't survive in this environment as it is. This is a beautiful thing. Let's start doing this. And they're going to adopt it and they're going to welcome it. And then we're going to see more and more rollout here. And as it rolls out, I believe once people start to get comfortable with it, that's when it's really going to start coming apart faster, because then they have to transition us over into full tokenization. And everyone knows it's coming. Everyone. Programmable money. Yeah. And that's a problem. I've written papers and papers after this, multiple. I've done multiple videos about it. I want people to start educating themselves about programmable money and what it means. So take that as a little bit of homework.
The system now unfolding before us is not an evolution of money. It's a restructuring of power. What's being presented as modernization is, in truth, a quiet handover of financial freedom from the people to the institutions that already control debt, credit, and the flow of currency. Behind the curtain of innovation, digital tokens, and programmable money lies the exact mechanism of control that has ruled economies for a century. Only now, it's instantaneous, traceable, and irreversible. As the traditional monetary order weakens, new digital currencies are emerging. Not to liberate markets, but to cement the hierarchy of wealth. Corporations will issue their own tokens. The state will oversee them through its central banks, and the population will be told this is progress. In reality, it's the old company store model reborn. You'll work, earn, and spend within a closed system designed to ensure dependence. The tools of convenience, smart payments, stablecoins, digital IDs, will quietly become tools of compliance. Meanwhile, the physical economy continues to erode. Real production is offshored, inflation erodes wages, and the middle class is being methodically replaced by a service class that relies on digital stipends. When the debt pyramid finally tips, those holding paper or pixels will find their assets evaporate in real time. History shows that all fiat systems end the same way, with currency collapse followed by a reset. The difference this time is that the new system won't be printed, it will be coded. As this transition accelerates, individuals must recognize the importance of tangible value, assets that exist outside the digital framework. The move toward programmable currency is the final act of monetary centralization. Once it's complete, every transaction, every decision, and every dollar will be under observation. That's why understanding this shift and preparing accordingly is no longer optional. Share your thoughts on their analysis in the comment section below. If you find this video informative, please support and turn on notifications to stay informed about our latest videos. See you in the following video. Thanks for watching.